While the outlook for the economy and the market remains bright, both are encountering supply constraints as reopening continues. Now, despite a surge in consumer spending and an improving job market, labor and material shortages have become major hurdles that the recovery needs to overcome. As such, inflation and slower job growth remain topics of concern when discussing how fast the United States can get back to its pre-pandemic levels. Meanwhile, the housing market has had a solid performance since the second half of 2020, but it is showing signs of moderations in recent weeks. As tight supply continues to apply upward pressure on prices, the market momentum could slow as affordability issues kick in around the second half of this year. Now, welcome back, you guys. If you're new here, hello, welcome. I am Tara Coyle with Coyle & Verberni Real Estate and eXp Realty. Now, before we get started, please don't forget, hit that button, ring the bell, make sure that you are subscribed so that you never miss one of our awesome and, of course, very informative video uploads. Now, today what we're going to talk about is we are going to review the latest California Association of Realtors Market Minute Update. And this update discusses the most current data about how our real estate market here in California is doing, what you can expect, and what we can look for in terms of trends moving forward. Now, realtors, they see some market moderations in the week ahead. And while almost half of those who responded to the weekly survey expected home sales to rise in the coming week, the share has been below 50% for the fourth time in the past 5 weeks. Meanwhile, more realtors believe that home prices might have already peaked, as those who expected prices to go up declined to 58%, which is the lowest level since late January. Now, the consistent moderations since late April, they suggest that the market momentum could be easing slightly and going into the summer recession. Job growth also improves, but it's a little bit lower than was expected. In fact, in the United States, employers added 599,000 jobs last month, an increase from a revised 278,000 in April. But the gains were lower than expected, and businesses continue to struggle to fill job openings as potential workers remain on the sidelines. Now, factors that constrain the labor supply include workers' fear to go back to their jobs because of concerns about catching COVID, the disincentive effect of the additional unemployment benefits, and of course, childcare constraints as schools have not fully returned to in-person learning. With payrolls still 7.6 million below the pre-pandemic level, a full recovery may not be reached until as early as 2023. In fact, the unemployment rate fell to 5.8% in May from 6.1% in April. Also, when we look at interest rates, the rates are inching up, but they're still remaining below 3%. In fact, the average 30-year fixed rate mortgage increased slightly the first week of June, but it remained below the 3% threshold. And despite market concerns about rising inflation in the recent weeks as the economy continues to recover, the average 30-year fixed rate mortgage compiled by Freddie Mac has been at or below 3% for the past 7 weeks. The lower than expected job growth figure released last Friday may have eased some of the market concerns, as the 10-year Treasury has been primarily moving sideways since then. Okay, what else? Well, let's also talk about consumers' feelings. Consumers are feeling a little bit more pessimistic about home buying, and why? Well, as housing affordability deteriorated further and supply shortage remained an issue, home buyers' sentiment declined to the lowest point in 32 months, according to the California Association of Realtors Housing Sentiment Survey. And only 19% of consumers believe that it's a good time to buy a home in May of 2021, which was a sharp drop from 25% in the prior month and a steep decline from 31% in May of 2020. With California setting another record median price in April of 2021 and the corresponding mortgage payment increasing more than 30% from a year ago, potential homebuyers are feeling more pessimistic about home buying conditions. Meanwhile, 72% of all respondents believe it is a great time to sell, and an all-time high since the survey launched back in September of 2018. So sellers are feeling very motivated, but buyers are getting a little bit worrisome. Home building also is at its fastest pace in areas with the shortest commute times. So home building expanded the fastest in places with the shortest commute times, according to an index released by the National Association of Home Builders. And the Q1 of 2021 Home Building Geography Index shows that single family home building was the highest in the longest commute, which was the top 2 quintiles, with a combined market share of just under 64%. Now, the year-over-year growth rate, however, was at the strongest at 22.2% in the shortest commute areas, which was the bottom quintile. So what this means is while the longer commute areas have a much greater market share in single-family home building, the construction growth rates were the highest in areas with the shortest commute times. Now, as always, we hope that you found this program to be beneficial. Please like, comment, or share, and make it a great home buying and selling day.